Hello everyone and welcome to the Market Trend Tracker. My name is scsonbhadra and I have been able to compound my investments by leveraging the concept of technical and fundamental analysis of the stock market. The most important concepts I use are relative strength and breakout strategies, and I'm very excited to share this knowledge and concepts with you. I hope you'll find it useful too. Let's unlock the secret of compounding your investments by mastering the art of trend analysis and breakout strategies. By looking at the chart, we can clearly say that the current market situation is directionless. The trend following indicators are flattening out, which shows that market is either consolidating or it is preparing to go into the downtrend. Whether it is Nifty 50, Nifty Total Market, Nifty 500, mid cap, small cap or micro cap. Every market corrected sharply in last few weeks. However, they showed some kind of a sharp pullback, but those pullbacks are not as it was expected. Except microcap, all other key indices are trading below its 21-day moving average. In sectoral indices also, many of the indices are trading below their 21-day EMA. Some are even below their 100-day EMA. When we check this table, it is very clear that many of the indices are trading below their 21-day EMA, 50-day or 100-day EMA. Now, as usual, we will analyze the sectoral trend of the market. For that, we will be utilizing the concept of relative strength to identify which sectors are having a strong tailwind and which sectors are facing headwinds. As always, our aim is to identify the super performing stocks which are leading this trend. Once we have identified these potential winners, we will look into the technical setup to see if there is an entry point available for us to take advantage of. Before jumping into that, let's understand the relative strength and the breakout strategy. Relative strength in the stock market is a measure where a stock or sector is compared against its market index. We have shown three case scenario over here, where consider that A is your market index and which is moving in case 1 it is upward trend, in case 2 it is consolidating or not moving anywhere, and in case 3 it is moving towards down. And your stock is B. In all three cases, we can clearly say that B's strength is better than A's. That is the relative strength of the B, that in the particular time period, B is performing better than A. A breakout in the stock happens when the price of that particular stock moves above any key resistance level, and that too with the huge volume. This signals that the price might continue in that direction, and any breakout has the potential to start a new trend. A breakout supported by a strong relative strength and a huge volume is a very powerful move, and we are here trying to capture that move. Healthcare sector outshines all other sector on the weekly basis, followed by auto, India manufacturing, multi-cap manufacturing and consumption sectors. Metal sector is showing very strong momentum in the monthly side, followed by auto, India manufacturing, MNC and healthcare. On contrary side, pharma and healthcare sector is the outstanding performer, where IT, India digital, consumer durable and consumption are also doing good. I could not locate any specific information on why this volatility is in the market. But by looking at the institutional investor, which means FIIs and DIIs numbers, it appears that there is a huge sell-off happening by FIIs and those are being absorbed by the DIIs. Therefore, theory of funds going out of Indian market to other emerging markets seems to be correct. When we observe the weekly worst performing sectors, the PSU bank is the leader, followed by FMCG, metal, oil and gas and energy sectors. On monthly performance, FMCG, oil and gas, energy, infra and media sectors are the worst performer. On quarterly performance, PSU bank, realty, PSE, CPSE and energy sectors are the worst performers. When we compare the sectors, randomness is observed in the whole market. Healthcare sector started performing again. It was silent for a few weeks and then showing momentum again. The strength is available in the metal sector. However, that is in pockets, like National Aluminium is doing good, but some of the companies in the metal sector are not doing good. There are quick changes happening in the manufacturing sector, where multi-cap manufacturing and Indian manufacturing companies have started performing well. Let's dive deeper into the companies who are taking the charge for this performance of the sectors. You can pause this video and note down this list of companies for your watch list. These companies are demonstrating strong momentum, making them an ideal stock for analysis. If you observe closely, the momentum of the stock market seems to be lost. and it has entered into the consolidation zone, and it is time to be very cautious. This is the performance of last week's breakout stocks. You can see that the metal sector stocks, out of there are 4 stocks of the metal sector are mentioned over here. 3 gave negative return, that means sector is not doing really good, but National Aluminium gave exceptionally good returns. Similarly, in the pharma sector also, Lal Path Lab gave, you can say, no profit, no loss kind of a situation where 0.3% of return was there, whereas Strides Pharma gave 6.97% of return. So there is a randomness in the market, so it is very much evident with this example. Let's check the breakout setup for this week's identified stocks. CG Power, breakout with a huge volume, and that too in ideal buying zone. Very good stock for us to take an entry. Divi's Laboratories, breakout happened 4 weeks back, and it is showing momentum again. Page Industries gave breakout 4 weeks back, consolidated again, and now gave breakout this week with a substantial volume. National Aluminium gave breakout 3 weeks, checked its support zone, and it's moving again up. Siemens, it is 3% away from its pivot point, so it will be interesting to observe. Mahindra & Mahindra gave breakout 3 weeks back, tested its support zone, now it can start moving up again. Bosch Limited gave breakout 4 weeks back, and it is still in its buying zone. Paytm, it is about to reach its pivot point, which is approximately 10% away from its current price level. Coforge gave breakout 4 or 5 weeks back, and it's just about to get away from its ideal buying zone. There are few stocks which do not give any fresh entry. However, if you already have those stocks, better to keep riding on those. Those names are Trent, Ipca Lab, Dixon Technologies, Strides Pharma, Jubilant Pharmnova, and Kalyan Jewellers. So this is the analysis of this week. Are you already watching any of those stocks? Drop your thoughts and comments in the comment box. And do let me know what do you think about this analysis. We will be publishing this report every Saturday. If you like our work, please do not forget to hit like, subscribe and share buttons. It means a lot to us. It keeps us motivated to bring quality content. Thank you for watching. See you in next video.